Welcome back, everyone. Today on the Joseph Carlson Show, I just bought more Google, even more than I already own, and Google is a large position. I want to go over in this episode why I'm adding to the position, why I'm building it up to be a little bit bigger, what my plans are of the future in this position, how I plan to change things around when it hits certain price targets, and different news going on with Google right now. For example, Google just announced today that they made a breakthrough with a new state-of-the-art quantum chip. So these supercomputers from Google are really gaining ground. There's ways that quantum computing can help with AI. So I'll be sharing some thoughts on Google today. We're also going to be taking a look at Apple. Apple's on a huge win streak. It's almost up to 250. The stock is up another 1.5% today when the rest of the market's in the red. And Apple has been on just a massive win streak, almost going up parabolic, going up every single day. If we look at the past week, it's up 1.6%. The past month, up 10%. You zoom out and it's just going up and up. It's crazy what's going on with Apple. This stock is actually doing a lot better than I anticipated. Apple is really excelling this year, and it's a little bit confusing. Why does Apple continue to go up? What are the catalysts here? What's causing this stock to gain? I'm going to be looking at this because I'm a bit perplexed by Apple, but there's different reports of why analysts are now turning more positive on the company. We also have news that TikTok is still scheduled to be banned. It's still on the chopping block. There's analysts like Gene Munster explaining what would happen if TikTok was really banned. How would it impact Meta? What would be the retaliation of the Chinese government? What companies would that impact primarily? We're going to be looking at this as well. And then finally, they caught him. They caught the killer of the UnitedHealthCare CEO. This guy was on the run. He was on the loose for about a week. But finally, they narrowed down the search. They got a tip, and they located a guy that fits the description. Based on what I see in the report, it's him. They got him. And I want to go over this and explain some of the details. We're going to be watching some of the footage of how they caught him. But I also have some thoughts I want to share on many social media posts. Many people grouping together, cheering on the killing of the CEO, celebrating his demise because of the troubled healthcare system and its many problems. We'll be going over that as well. So we have a lot to get to in this episode. Let's go ahead and jump in. We'll start off with my new purchase. I added an additional $10,000 to the passive income portfolio, and that money is being directed towards Google. I have an upcoming trade here. It's going to happen just in an hour. So maybe very soon here it's going to happen, where I buy $10,000 more of Google in the passive income portfolio. Now, in terms of my additions and gains in this portfolio, just to be clear, this year to date, I have added a total of $55,000 to the passive income portfolio, including this new buy of Google. So that's the money that I've put in, $55,000 into the passive income portfolio. The passive income portfolio in gains, which doesn't count contributions, just gains, has gained $170,000 this year. So the big majority of money in terms of growth of this portfolio in 2024 has been from gains, not from capital additions. So this gain of $326,000, a lot of it happened just in the past year. And that's how compounding works. You get the ball rolling. You get $100,000 invested. That's the first big landmark. Once you get $100,000 invested, you'll notice that the next $100,000 comes much quicker because you have momentum with your portfolio. And that's what I'm seeing now with this one. But I am still doing additions to the portfolio. I'm still adding money from time to time, especially when I can see value. When I look overall in my portfolio, I'll be honest here, most of the companies are trading at higher valuations, much higher than they were a couple years ago. I look at many of the companies, and these are true, high quality, asset light, network effect compounding companies. So I have a great set of assets here. The average weighted quality of my portfolio is incredibly high. I'd say it's on average around 3 times the quality of the S&P 500. So I'm looking at the portfolio and I like the names, but the valuation is becoming an increasing concern. Many companies are okay, but they're still at the higher end of their trading range, the higher end of their historical multiples. So they're not selling at the biggest deals right now. One company still sticks out as being one that's potentially deeply undervalued. That company still remains Google. Now, I own Google both in the passive income portfolio and the story fund. It's a combined $80,000 between the two now. So it's a rather large holding when you combine both positions. But Google is a company that I still want to add to right now because I believe the valuation and the qualities of the company give me a good risk and reward. And I want to explain why. When we look at Google, first of all, this is a company that's facing some big challenges, and I don't want to downplay those challenges. We've already seen what's going on with the Department of Justice. The remedy for fixing Google is to sell off Chrome and make it so they can't default their search engine anywhere. That's a problem for Google in and of itself. But then you also have the other issue with Google, the primary one that I believe investors are concerned about, which is large language models, LLMs. We have all these different companies like ChatGPT, we have Meta, we have Perplexity, we have all these different AI applications, and there's many smart people, intelligent people that believe that these LLMs are going to erode the monopoly moat of Google's search business. So we have a lot of headline challenges here. Problems with the DOJ, the moat being eroded. There's reasons to be bearish on the company. And this is where the important decisions are made. This is where different investors are grouped into different categories. We have the same set of information. We know the same challenges the company faces, but it's what we do with that information. Many investors are avoiding Google because they're uncertain of the future, and I'm putting more money into it right now because I believe the risk and reward is still in the positive. And I'll explain why I think it's in the positive. When we look at Google's search business, it is large, and that does face serious problems. But if we look at this over time, search is actually becoming a smaller and smaller portion of Google's business. For example, if you do the math, just the cloud business has grown from around 7% of Google's total revenue to around 11% of Google's total revenue. So the cloud business, which faces none of these headwinds, no DOJ lawsuits, no disruption, it's smooth sailing for their profitable cloud business. This is growing as a percentage of revenue. And not only is the business of cloud growing as a percentage of revenue, it's also growing in its operating margins. So it's growing as a percentage of Google's overall business, and it's growing in its margins and profitability. Now I want to go back to this revenue by segment chart here in Qualtrim because I believe it has a lot of insights to gain just by looking at this information and doing some breakdowns here. First of all, one of the big bear cases, again, is that search is going to be disrupted by the LLMs. That's something that many people are saying right now. But if we filter out and look at search, one of the problems that the critics run into is that we don't see it in the numbers. Frankly, we do not see search being disrupted by the numbers. And if it's going to happen, when is it going to happen? Give us a date. Is it 2025? Are we going to finally see the search being disrupted then? I don't see a clear date. What I see is 2 to 3 years of LLMs being out, ChatGPT having 100 million users, and it's growing. Many people know about ChatGPT. I'd say almost everyone in the United States knows about ChatGPT. Regardless, Google search grew revenue by 12%. So it's still growing revenue, even with all this stuff being released, even with the advent of AI. And I just have to believe that if we were having a true disruption through LLMs, that we would see some of that evidence appear right now in the data. It's been enough time for these LLMs to take hold. I feel like we should see some of that data. Now, again, I'm not ruling that out. It may happen in the future, but we haven't seen any evidence of it right now. Another thing I want to point out here with the revenue of Google is that overall, again, Google search is growing by 12% year over year. That's modest growth. It's still good. It's better than most companies. But if we reverse this and we cross out Google search and then we factor in every other line of business in aggregate, all of these combined, so the aggregate growth of everything else but Google search, that's growing almost 19%. So to put this in perspective, the other segments of Google are growing much faster than Google search. Every single quarter, they're taking more and more market share away from Google search in the total pie. This means that Google search in terms of their overall business and profits is becoming increasingly less important as these other segments grow. When I look at the other segments of Google's business, I don't see any existential threats facing this part of the company. Look at YouTube ads. Is YouTube facing any big threat, any big roadblock? I don't believe so. And I believe YouTube remains one of the prized assets to own in the world. This is part of the Google's business. They own one of the best companies in the world, which is YouTube. Then we have Google Network. As far as I can tell, this doesn't face any existential threat, not anything like the search business is facing. We have subscriptions, which Google has a tremendous amount of various subscriptions. They have hundreds and hundreds of millions of people on subscriptions. Part of that is with YouTube. YouTube Premium, which is like Spotify and ad-free YouTube. You can download videos, you can watch ads or watch without ads on mobile devices. And then they also have subscriptions for photo backup and all sorts of different things. Then you have the beast of a company, Google Cloud, their biggest growth path of the future, growing super fast and becoming highly profitable. This again is not facing any existential threat. I don't see any problems with that. In fact, it's a very well-positioned business. Then you have other bets which shouldn't be discredited. Even though it's a small portion of the overall revenue right now, the other bets includes Waymo, which based on the revenue multiple and the exuberance that Tesla is getting and other self-driving ventures are getting, Waymo could become a very valuable asset. If they can rapidly expand to more and more cities, they can figure out the technology, they can become a real competitor to Tesla down the road. So when I look at the overall business, the part that's under threat is still growing fast. The part that's not under threat is growing even faster, and still many prized assets in this company. And when we look at the overall valuation of the company, based on the simple valuation metrics, just a forward PE ratio, we can see that Google's not trading with any level of exuberance. In a market where everything's going up, where lots of people are paying huge multiples for companies, where they're driven by narratives and all these future visions, Google's trading at a below 20 forward PE ratio. That's rather cheap for a company that has this many valuable assets. So as I go through my holdings, I kind of look at them and think about them, ponder which ones are the best to put my money in. I still think that Google turns up as a good bet right now. So I'm adding more to this position. I'm overweighting my position in Google. Now, of course, we have to address the scenario that I'm wrong. What if Google really does struggle with competitors in the future? What if it does start showing up in the numbers? What if they start losing real market share from their search engine due to ChatGPT and Llama and Perplexity and the many other AI competitors? Well, in that case, even if I'm wrong with Google, I like to look at that scenario and kind of explore it a little bit and see what would happen. So let's just take a look at that and see what would happen if I was wrong. Let's say that Google really starts to lose market share with their search business, and instead of growing their search business, it just started to flatline. No growth in the search business. It went from 13% to 0%, or even starts to go down a little bit. Okay, that would be bad news for Google. The stock would go down. Now, it might go down 10 or 15%, but is Google the type of stock with this type of company, with this many assets they own, with YouTube, Google Cloud, their whole ad network business, owning Waymo, with all those assets, is Google the type of company to drop 90%? Will it drop 90% in 2 quarters? Very doubtful. So even when I explore the bear case, my thoughts are that even if things go wrong with Google, the company doesn't do well, that I'm not going to lose too much money on it. I might lose 10, 20, maybe 30%, but it's not going to be a tragedy. It won't be a stock that goes down 90%. So it's not one that I believe I'm going to lose too much money on if things go poorly, but I also believe that things are better than they look for Google. I believe there's a lot of upside for the company. What I plan on doing with my position is I plan on buying this $10,000, adding more to my position. I own it in both the story fund and the passive income portfolio, and it's overweight right now. I'm going to keep this as an overweight position until it starts to get above $200 per share. Once the price inevitably gets up to $200 per share through earnings reports or through positive sentiment, that's when I'm going to look at the position and I'll start to take a little bit off the table, being deeply in the green at that point. So I'll get to that point, I'll start trimming my position back a little bit, paring it back, and putting that towards other companies. But right now, I'm overweight the stock. Now moving on, we have some other news that's relevant to Google. This news came out happen chance at the same time, but I really didn't base my buy today off of this news. We have from Sundar Pichai, the CEO of Google, saying, introducing Willow, our new state-of-the-art quantum computing chip with breakthroughs that can reduce errors exponentially as we scale up using more qubits. I think that's what it's called. Cracking a 30-year challenge in the field. In benchmark tests, Willow solved a standard computation in 5 minutes that would take a leading supercomputer 10 to the 25th years, far beyond the age of the universe. So they went from a computing challenge benchmark, from something that took a leading supercomputer 10 to the 25th years, which is, that's a number. I don't even know what that number is. It's an inconceivable number, more than the age of the universe, down to 5 minutes, less than 5 minutes. So there's progress being made here in computing. Elon Musk was actually left impressed by this. He responded to it by saying, wow. Now, Google has a blog post that goes through in a lot of detail, explaining the efforts and time and the big leap in technology that this is. But a lot of it is very abstract. It's difficult to understand what real-world applications this really has. It's cool they're doing this, but what does it really mean? How does it change anything? We have really fast computers. What does that do? But this type of technology does have very real applications. If we look at different things like drug discovery, quantum computers are ideal for getting precise simulations of how potential drugs interact with complex biological molecules. This may help researchers better identify drug candidates and ultimately improve healthcare worldwide. That's one real-world application. But then you also have industrial chemistry. You have sustainable technology, like battery technology. And then, of course, you just have science in general, fundamental physics research. A lot of our understanding of the world is being blocked by computational knowledge. So having these computers can better understand physics. All of this is very impressive, that Google had this big breakthrough. They have this new supercomputer, but this is also not the reason I'm buying the company. Even without this news, it really has no factor on my investment thesis, but it shows you all the different things Google's doing behind the scenes that we don't really see. Now, moving on to another piece of news is Apple. This stock just continues to go up, and it doesn't really make sense. Why does Apple continue to go up more and more? The stock trades at a relatively rich valuation, a 33 Forward PE ratio. When we look at the revenue growth of the company, it is completely flat for the past 2 years. The earnings per share are also flat for the past 2 years. Yet Apple stock continues to march upwards in lockstep. I've looked at news to try to explain why Apple stock is moving up, and there's just not much here, not much of an explanation. They speculate that part of the move upwards may just be because it's Apple. It's a stock that everybody knows, they know the company, it's a buyback machine, it's a dividend payer, it's part of the Mag 7. It's a stock that's really at the center of everything. So it might just be moving up because people are familiar with it, they know it, and it's a big weighting in the indices. We also have analysts like Dan Ives saying that the street is starting to realize that the iPhone 16 is the start of a super cycle and China's sales look robust, sending the bears into hibernation mode. That could be it as well. Maybe the bears are in hibernation mode. I wouldn't want to be bearish on Apple. Who would really want to bet against that company? But even so, I don't understand this move upward fully. I don't see why Apple continues to move upwards with the challenges it's facing to its fundamentals. I've been reducing my Apple stake all throughout this year. I still own a decent amount of the company, but I have been reducing my stake. I've been impressed with the company going up, but I don't need to understand what type of thing drives this stock higher. All I know is that Apple right now, to me, seems like a more difficult bet than it did a couple years ago. And some people may say, Joseph, don't you regret selling Apple earlier this year? I don't. I don't have any regrets for it because I still don't make sense of this big move upwards. And right now, most of the companies that I've been buying into have far outperformed Apple this year. So I'm not concerned about trimming this position, but I do think it's astounding how well Apple continues to perform. On the subject of Apple, we also have the TikTok ban, which could have direct implications for Apple's business. Here's Gene Munster's take on the implications that would happen if TikTok was banned.
If not, it's going to come down to if this does in fact get banned and they don't take the money, there's going to be some form of retaliation. The two obvious targets are Tesla and Apple.
In what way do you think the Chinese could exert, pressure on Tesla, they could do whatever to their factories. In terms of Apple, what would be the way you would be concerned about retaliation?
So China is the master at red tape. And I spent 7 years, spent a lot of time in China, covering a lot of the China internet companies, worked with a lot of Chinese people, and I was taught just in terms of what they want to do things is below the fold. And so the master of red tape would be just making it difficult. How many hours a week? They could change some laws about number of hours a week that potentially someone could work. They could change how much power a given Foxconn factory can use in a given week. They can work. They did this to Tesla. They can impact the shipping, the trucking companies that would take the Teslas to port to be exported to Europe. They could do something like that with Apple. So I don't think it would be something where it'd be a big headline. The last piece that they could do is they could have a big influence in terms of how Chinese people think about Apple products or Tesla products. They obviously control like what Weibo and that language is, and they can influence that conversation. And so there's a lot of levers below the fold that can be used. Unfortunately for investors, it's not going to be an obvious headline. It's just going to be something where it just the gears of progress just slow.
If TikTok were to be banned, that would not be good for US companies that do a lot of business in China, specifically the biggest, most iconic ones like Apple and Tesla. Those would be the likely targets. And I also agree that it would probably be through a lot of different regulations and levers that China would pull. He mentions all these regulatory levers, and then he also mentions the fact that China has immense control over the media, the perception of the Chinese people looking at Apple, looking at their product, their brand value, and their reputation. If there was this animosity, if the Chinese people no longer liked Apple and wanted to buy their products, that would impact a huge portion of Apple's sales. So even though I still believe it remains unlikely for TikTok to ultimately be banned, there are going to be some consequences if they are. Now moving on, we get to the follow-up of an important story, a shocking story of brazen murder. The CEO of UnitedHealthCare, Brian Thompson, was leaving his Manhattan hotel early morning in New York City, and he was shot in the back multiple times, execution style, from someone that had a mask on. He had a jacket on, trying to cover his identity, and he shot him with a silenced pistol. He got on his bike after the killing. He fled to New York Central Park. That was the last time he was seen. Now we have an update that they have apparently found that guy. Let's go over a news update, and then we'll break down all the details we know so far.
Members of the Altoona Police Department arrested Luigi Mangione, a 26-year-old male, on firearms charges. At this time, he is believed to be our person of interest in the brazen targeted murder of Brian Thompson, CEO of UnitedHealthCare, last Wednesday in Midtown Manhattan. The suspect was in a McDonald's and was recognized by an employee who then called local police. Responding officers questioned the suspect, who was acting suspiciously and was carrying multiple fraudulent IDs as well as a U.S. passport. Upon further investigation, officers recovered a firearm on his person as well as a suppressor, both consistent with the weapon used in the murder. They also recovered clothing, including a mask consistent with those worn by our wanted individual. Also recovered was a fraudulent New Jersey ID, matching the ID our suspect used to check into his New York City hostel before the shooting incident. Additionally, officers recovered a handwritten document that speaks to both his motivation and mindset. NYPD detectives are en route to Pennsylvania as we seek to interview the subject further.
That's about everything you could ask for. They have the gun, they have the fake IDs that were used to go into the hostel. They have a motive with him having a manifesto of hating healthcare companies. It's like he gave them a package deal of everything they need to now convict them with a very long sentence. So not only do they have the person of interest, which of course he is innocent until proven guilty in a court of law, but they have basically all the evidence they need to now make a guilty conviction. All it needs to happen is going through the jury conviction. Now, who is the hero in this case? Who is the one that caught him? In this case, it was a McDonald's employee. So this guy is going to go to jail. With the evidence they have, I think he's going to go to jail for a long period of time for the murder of Brian Thompson. And he'll have gone to jail because he was caught by a McDonald's employee. The McDonald's employee says that this individual was acting odd or suspicious in different ways, just unusual. And they noticed that he fit the description that all the photographs gave. So these photographs also led to the arrest. Now, I do have a couple thoughts on the people celebrating this brazen scumbag murder, celebrating that a CEO was killed of an industry that they don't like. Just a few thoughts on that. Two things can be accurate at the same time. Two things can be true at the same time. One, that our healthcare system is not perfect. It faces many problems. I've gone through it as well. There is problems with the healthcare industry, with the insurance industry, with trying to get good coverage, with the billing of it. It's a very complex, nuanced, and problematic industry. It's also true that murder is bad, that murder shouldn't be celebrated, that I shouldn't even have to say this. And I was astonished by the reaction online. I always suspect that there's a small number of people that are going to have really dumb reactions to things or stupid takes. Out of the vast number of people, there's a segment that's always going to have a dumb way of looking at things. That's to be expected. But in this case, I saw thousands of people posting, celebrating the murder of an executive, of a CEO. Now, again, healthcare is not figured out. It's a big problem. It's a frustrating problem. A lot of us has been through that. But also, murder isn't okay, and celebrating it isn't okay. Even if you have some contorted view that celebrating Brian Thompson's murder has any implications on our overall healthcare system. Now, I don't know anything about Brian Thompson. I don't know what type of guy he was, or if he was a good person or a bad person. But he didn't deserve to be murdered brazenly on a street of New York because he was a healthcare executive. Brian Thompson has only been in that position for a couple of years. So he was CEO of UnitedHealthCare for around 3 years. Not enough to meaningfully change anything in the industry. He has little influence over the entire healthcare industry. But even in his own company, the type of things he was working on influencing were healthcare prices. His last LinkedIn post online was that he was going to reduce the price of healthcare. That's what he was working for, reducing premiums. Many people mistakenly bring up that UnitedHealthCare has a lot of denial of claims, which is true, but that's without context. A lot of those denial of claims are from fraudulent claims from hospitals overbilling. If you don't deny any claims, hospitals can do excessive billing, which raises the healthcare premiums for everyone. So there's added context that doesn't really get to the surface when people are looking at one stat to try to validate a point they're looking at. The point here is healthcare is incredibly complex. You're working with patients, hospitals, and insurance companies all trying to figure out the billing and pricing. There's different incentives in different parties along the way. The insurance companies are not the only system to blame here. And overall, the healthcare industry is incredibly regulated. The government plays a massive role here. Brian Thompson was a CEO of a company that has a 6% profit margin. Nothing unusual in American business. It was operating just like a normal insurance company. Now, again, he was there for a couple years as CEO. He took the job like many of us do. We don't go into one field or another. We just take jobs at different companies based on experience and opportunity. He probably didn't grow up wanting to be a healthcare executive. He just took a job that was available. And for that crime, he faced being murdered in the street. The person killing him, making it so his wife no longer has a husband, and the two boys no longer have a dad. That's the result of this. What also is going to result from this is no better healthcare. Brian Thompson was not the problem of the healthcare industry. He didn't orchestrate it. He didn't engineer it. He didn't create the issues with the healthcare industry. So by killing him, you solve none of the problems. He was one person doing one job that he had available. Killing him just destroyed his family. That was the only result of it. So to the people celebrating that he was brazenly murdered by this scumbag, you show an incredible amount of ignorance of both the healthcare industry, the regulations behind it, and of business in general. You show a lot of ignorance and a lot of general degeneracy. A lot of people celebrating this. I just can't imagine that mind frame. You and I have nothing in common if you celebrate this. Now, the thing that I'm celebrating is that he was caught. If this is really him, which it sounds like it is, I think there's a 99% chance we got the guy. I am celebrating that. I'm happy he's caught. I'm happy he's going to go to jail for a long period of time. I'm happy that we don't live in Batman's Gotham City, where people can just walk up and murder executives because they have issues with the industry in general. That's such a destructive and cynical view of the world, and it's not how we make any type of progress or change in this industry. So I'm very happy that he was caught. If this is the guy, I'm glad we got him, and I hope that his sentence sends a clear message to anyone else trying to do the same thing. That's going to be it for this episode. Hope you enjoyed. See you in the next one.